Now it's time for business news with Kate Moody. Good evening, Kate.
Hi, James.
Now you're starting with news of job cuts in the pharmaceutical industry, which have sparked outrage amongst unions here in France.
Yeah, with all eyes on it as it tries to develop a COVID-19 vaccine, as its rivals are doing. The French pharmaceutical giant Sanofi is pushing ahead with plans to cut some 1,700 jobs across Europe, as it announced back in June. Unions said on Monday that they'd been told that would include 400 employees in its research and development division here in France. Employees are worried about the broader implications, as Julia Kim explains.
Outside this Sanofi site in the Paris region, workers aren't happy about the news.
Pour moi, c'est pas admissible parce qu'en fait, on fait énormément de bénéfices, on a beaucoup d'argent dans l'entreprise, donc on a les moyens d'embaucher, on a les moyens de remplacer les gens qui partent.
On a l'impression qu'on est là maintenant pour produire des choses qu'on sait faire, mais qu'on est incapable d'innover. Donc voilà, moi pour l'innovation, ça me fait peur.
The voluntary redundancy plan would axe 400 jobs in the research and development department, even though the company is lagging behind the race to produce a COVID vaccine. For the CGT Labour Union, job cuts have consequences.
On peut s'interroger si le retard du développement du vaccin chez Sanofi n'est pas lié à cette perte de compétences, cette perte de savoir-faire.
Sanofi has denied this. It's pledged to invest more than €6 billion in research and development over the next 3 years. But it's not certain Sanofi's employees will see any of that money. Experts say it's become more frequent for Big Pharma to outsource its R&D to startups, like BioNTech, which partnered with Pfizer to create one of the world's first COVID vaccines.
The most detailed research happens in these startups, with financing that comes from these laboratories. Once there's a drug that's effective and profitable, the big labs buy the license for the formula.
Sanofi has partnered with British company GlaxoSmithKline to develop a COVID vaccine, but says its doses won't be ready until the end of 2021.
Let's check in on the day's trading action now. Wall Street is closed for the Martin Luther King holiday. A mixed close for the major European indices saw the FTSE 100 ending slightly lower in London. The DAX and CAC 40 both slightly above the flat line there. Monday also saw the market debut of Stellantis. That's the new name of the car company that combines PSA Peugeot and Fiat Chrysler. The $52 billion merger was finalized over the weekend, creating the world's fourth largest car manufacturer by volume. Shares rose over 7% in both Paris and Milan. Stellantis will also launch on the New York Stock Exchange on Tuesday. Moving on to some of the day's other business headlines now. Joe Biden is planning to issue a number of executive orders once he's sworn into office later this week, including a U-turn on a controversial oil pipeline. The Keystone XL oil project aims to streamline the delivery of 500,000 barrels of crude oil per day from Alberta, Canada, to refineries in Texas. But Biden and Barack Obama have expressed concerns about the environmental impact, and the president-elect is reportedly planning to revoke the permit. French oil giant Total is buying a 20% stake in India's Adani Green Energy, a major producer of solar energy. The $2.5 billion deal will give the company a stronger footing as it tries to shift to renewable energy sources. And Disneyland Paris won't reopen its doors until at least April, 7 weeks later than initially planned because of the coronavirus pandemic. The theme park, which employs some 17,000 people, closed last spring and again at the end of October. The park's parent company is cutting some 32,000 jobs around the world, most of them at its 2 U.S. theme parks. Central London saw a different kind of traffic jam today as more than a dozen shellfish trucks staged a protest near the Houses of Parliament and Downing Street. The drivers were mainly Scottish fishermen and seafood exporters who say their business is floundering post-Brexit because of bureaucratic delays to shipments of fresh and live produce. The protesters and others in the industry have complained of mountains of paperwork, including customs declarations, health certificates, and extra costs.
Cost involved now is incredible compared to what it was. I mean, for a weekly shipment now, it's pretty much £3,500 extra per week for me to ship to my customers now. Where does that money come off? It can't come off us. It's got to come back to the boats, customers. It's just not feasible to run.
So lots of extra costs there. Boris Johnson reacting to these protests, describing these difficulties as teething problems, which will be smoothed out with time. But a lot of these fishermen saying they can't afford to wait, James. And their slogan, if you saw it on their trucks today, was Brexit carnage.
I think a lot of upset as the Brexit realities kick in at the moment. Thanks for that, Kate.